Hey all, welcome to ShareTreck. This is Raj here. Again, one of my quick end of day videos. I will go into the TradingView platform to illustrate a few points. Basically, I'm going to give you a progress report on my thesis and also explain what I think has happened today and why I think we are not yet out of the woods. With that, let's get started. Welcome back, friends. I'd like to take a quick look at QQQ first to give you an idea of why I think that we are not yet out of the woods. And I'll also explain, in my opinion, what is it that caused the bit of jump today. Our futures are also looking very healthy. That kind of makes one feel that we are back into a bull channel. But I'm going to be a bit more cautious. You can see my explanations and then put your comments so that I can understand how you look at this. That said, let's get on to the QQQ first. We are in QQQ here in the TradingView platform. This is Nasdaq Futures in the trading platform. As you can see, I have a long-term trend line, which is actually the bull channel in which we were traveling for the longest time. We have come out. We are still below this diagonal line of support. And what I see here is more of a consolidation than anything else. I need more clues before I can decide that we are going in a bullish channel which is parallel to where we were before. So the reason for this spike, in my opinion, is the benign PPI month over month, which came 0.1% less than expected. So that's the kind of number that has made the markets feel, okay, inflation may not be as sticky as we thought yesterday. And core PPM came up to consensus, and initial jobless claim was slightly less than the consensus. When jobless claims are less, that means the economy is stronger than expected. But this was all overshadowed by the 0.1% decline in the PPI as compared to the consensus. So that's what made the jump happen today. We'll have to see what happens tomorrow, because right now there is no clear evidence that we are in a bull channel and that the spike is going to continue. Now let us go on to QQQ. We were in Nasdaq Futures, now we are in QQQ, which is what we use as a proxy for Nasdaq. And if I draw this line further out here, so this was our bull channel in which we were traveling before we dropped out. This kind of mirrors what we had for Nasdaq Futures. But this is the diagonal line of support that I have drawn here in order to get an estimate of whether we are having higher lows. I still don't have evidence of that. We have been going above and below this line, so this line doesn't make much of a sense. So I'm going to remove this off. So what I see here is a bit of consolidation, that's all. So this consolidation could also mean that we may drop below. And if we drop, then I think we have first support at 429.59, and also we have the 50-day exponential moving average sitting at 434.84. So there is still need for more evidence before we can pop the champagne glasses. And I'm going to tell you what I think is the reason why we moved up. I think we moved up because of the fact that the PPI numbers helped NVIDIA to move up. So that was one. The other thing is that if you look at Google has been making some positive moves because of a few product release announcements. If you look at Apple, they announced the AI enablement of their entire lineup. So Apple also just moved up. See, you can see the huge jump from Apple. This in turn pushed up FNGU, which tracks the Magnificent 4 or 5 that I was talking about in my video yesterday. So our thesis kind of holds correct in the sense that all the core players that I spoke about yesterday, like Apple, Meta, NVIDIA, and Google, these are all doing well, and Amazon, these are doing well, and these are pushing us along. So that thesis still holds. But if the wider market doesn't support, then we might continue to consolidate within a range and not actually go up further. So stock picking has to be the key going forward. And towards that end, I think we'll have to start watching companies which have got really good financials and strong pricing power. I reiterate what I said yesterday. So that's my spiel for today, my friends. The market is going to continue rewarding companies which have got a very strong cash balance, which have got pricing power, and which have got a leadership status in their segment of the market. And it's going to continue punishing companies which do not have a product line, which do not have steady revenues, and which do not have strong cash balance to take care of their expenses. So these are the two contrasts. So the foregone conclusion is that genomics is not likely to do very well. Now I want to show you the genomics today. We'll still expect a little bit of money moving in and out. So we'll see a little bit of greenery out there, but the overall trend for genomics is likely to be sideways or down. Let me just quickly take you to our genomics watch list before I end this video. So this is our genomics watch list, and as you can see, we have some of the companies in the green. Altimmune, I think it's recovering after an initial sell-off post. So here is our genomic watch list. And among our regulars, we have CRISPR Therapeutics, which is up 1.90. This company has got strong cash balance, and it has got a monetized product in the market. PSEB is up 1.50%. They have got a monetized product in the market. Beam, Verve, and ArcG, I think these three are an outlier. They have got marginal gains, but it's just sentimental trade. That's all. The rest are all in the red, despite having a bunch of monetized product. Blue is still negative because their cash position is a bit precarious. So they need to show some good sales figures for Lifegenia and Zynteglo and Skysona, and then things will change for them. Well friends, that's all for now. I'll catch up with you again in the next video. See you later.